This is a video every pensioner, every carer, every universal credit recipient, and frankly, anyone relying on the DWP must watch, because what's happening behind the scenes right now could completely change how you receive your money in 2025. The Department for Work and Pensions has just confirmed major new bank verification rules. And if you're not ready, your pension, personal independence payment, universal credit, carrier's allowance, ESA, even your cost of living support could be delayed, blocked, or even sent back. Let me say that again. Even if you've been receiving your pension or benefits into the same bank account for years, these new rules could stop that money from arriving altogether. And here's the kicker. Many people won't find out anything's wrong until the day their payment disappears. No warning, no notice, no explanation. Welcome to Pensioners Power, your trusted source for everything you need to know about pensions, retirement planning, and financial wellness. Here, we cover the latest news, expert insights, and essential updates to help you maximize your retirement years. Whether it's understanding pension schemes, making the most of your savings, or staying informed about financial changes, you're in the right place. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an important update. Now, let's jump right into today's topic. So what exactly is going on? In early 2025, the DWP is introducing a brand new payment verification system, part of a wider plan to modernize and digitize benefit systems across the UK. This new framework means that every single benefit payment, including the state pension, will go through a stricter identity check before it reaches your account. And unless your bank account is compatible with the DWP's upgraded verification system, your payment could be held, flagged, or rejected. What's even more concerning is this: banks themselves are updating their internal systems in silence. No public announcements, no big campaigns, just quiet updates and a behind-the-scenes shift that affects millions of accounts. This isn't a trial. This isn't a maybe. This is confirmed policy. So why now? Why is the DWP and the UK government making these changes? The official line is about security and fraud prevention. According to Whitehall insiders, billions of pounds have been lost over the years to fraudulent claims and identity mismatches. And on paper, this all sounds reasonable. After all, we all want a system that's fair, one that prevents criminals from claiming what they aren't owed. But here's the reality. This upgrade isn't just catching fraudsters. It's also going to affect tens of thousands of honest pensioners and benefit recipients, people who've done nothing wrong, but who may have small discrepancies in their bank or DWP records. Think about it. A middle name missing, an outdated postcode, a name slightly different between your bank and your DWP file. Even the wrong capitalization in your name could trigger a flag. And that flag? That could stop your next payment from reaching your account. Let's walk through this. It's your regular pension payday. You check your account like you always do. But the money isn't there. You wait an hour. Maybe it's late. You call your bank, they say, everything looks fine. They tell you to call the DWP. You get through after waiting 45 minutes on hold, and they tell you the payment was rejected pending identity verification. Now you're caught between two massive systems, both of which insist the problem lies with the other. And in the meantime, your bills, your groceries, your medication costs, none of that waits. Here's the part that should concern us all. The DWP is not sending warning letters unless a problem already exists. Let that sink in. There's no mass letter drop, no phone calls, no email campaign. If your account is fine, you hear nothing. If it's not, you find out after the money doesn't show up. That's why this video is so important. Because by watching it, you're already ahead of the curve. Now, let's talk about the banks. Many of the larger banks, Barclays, Lloyds, NatWest, HSBC, Santander, are fully compliant or in the final stages of compliance with the new DWP verification protocols. But others, including some building societies, credit unions, and online-only banks, may not be ready in time. And here's where it gets tricky. Even if your bank is compliant, your account type might not be. Certain old savings-linked accounts, joint accounts with unverified secondary holders, or accounts not meant for regular incoming payments may be rejected under the new system. Now, let's clear up a serious misunderstanding that's spreading fast. There's a rumor flying around that joint accounts will no longer be accepted by the DWP. This is not entirely true. Yes, joint accounts are still allowed, but both account holders must be fully verified, and their names must match DWP records exactly. So if you and your partner receive pensions into a shared account, double-check everything. Make sure names are spelled the same as your DWP file. NI numbers are properly linked. All addresses and phone numbers are up to date. A small mismatch can shut the whole thing down. The DWP has not released a formal cutoff date, but we know that March 2025 is the quiet target. After that point, accounts that haven't passed the new verification process may be deprioritized or flagged. This gives you a crucial window right now to take action before the system becomes locked in. If you've been thinking about moving to a new bank or switching account types, this is your moment. Before March 2025, transitions between banks are expected to be smoother and faster, especially for those moving to fully verified institutions. Once the new system is live, switching will involve new verification steps, potential delays, and a risk of losing your payment cycle during the update. By acting now, you can move safely without disruption. Here's something very few people know, and it's buried deep in recent DWP reports. Accounts that are fully verified before the March deadline will be placed into a priority processing tier. That means fewer future checks, faster cost of living top-ups, shorter review windows when rates are adjusted, and in some cases, early payment deposits. Yes, if your account is 100% matched to DWP standards, you may receive payments slightly ahead of schedule. Here's what to do right now. Call your bank, ask if your account is compliant with DWP's digital verification standards. Update your DWP file. Make sure your name, address, phone number, and national insurance number are up to date. Double-check your joint account. Make sure both names are matched to your DWP records. Consider switching to a major bank if you're with a provider that may not be compliant. Do this before March 2025, or you may face delays and headaches later. For millions of people, your pension or benefit payment is not a luxury. It's the lifeline that keeps you going. A blocked payment could mean missed rent, no heating, no food, missed medications, spiraling stress, and in a cost of living crisis, even a few days of disruption can set you back weeks. Please don't wait for a letter. Don't assume your account is fine. Don't hope the system will figure it out, because in 2025, hope won't be enough. Preparation, action, and knowledge, that's what's going to protect your income, your stability, and your peace of mind. Thank you for watching Pensioners Power. If you found this video helpful, be sure to give it a thumbs up and share it with others. Stay informed, stay engaged, and we'll see you in the next video with more insights on the issues that affect the UK. Take care, and don't forget to subscribe to my channel for all the latest updates.